Hi, this is Randy Finney with the right side of the chart, and this is a post-FOMC update for Wednesday, September 21st, 2022. It's 2:19 p.m. Eastern Time, so we're about 19 minutes past the FOMC rate announcement as expected, a quarter point. Keep in mind, Powell comes on, does his dog and pony show at 2:30. That's when that starts, his press conference. And so if my hunch that he's going to talk the tough talk on rates and we're going to keep raising rates and all that, as he is, and is expected to do. Like I said, mostly jawboning the market down. We know this 75 was baked in the cake, but if he is going to backpedal a little bit on QT, as I expect, that's when it's going to happen. They don't. That all his additional comments come at the press conference at 2 o'clock. They just tell you what they're doing on rates, and then he comes out. So as I mentioned, fired a post off to you right away. Waited to see what happened. We got an initial fade, and as I said, I've been doing this for many years. There are no guarantees, but quite often, almost always, honestly. It just seems like just about always. I'd have to go back and look at some exceptions, but the initial reaction is not the lasting reaction. What I mean by that, here's 2 p.m. right here. This is just a 1-minute chart. Boom, that's the initial reaction. So the initial reaction is often faded, whether it's a pop to the upside and then faded with a drop, or whether it's a drop faded by a pop to the upside. What I like about this one, like I said, it's kind of random, a shot, just a random shot on a drop, but this came right to support. Here, let me turn off all the lines here. This is QQQ. These are the recent lows right here. So you dropped right down to where the Qs have been holding support. So I'll take that shot all day long, every time and I said earlier, a stop, a 60 or 120-minute stop, a solid close below, meaning not just let's see, is it below? You'd have to see a solid close, and you might want to. It depends how. When sometimes I've seen where his press conference doesn't start exactly at 2:30, and then it's going to take a while for him to get in there. He's going to give his little speech, and then he opens up to the press. And again, if the sharks smell blood, meaning the bulls smell weakness, any slight bit of dovishness, like I said, we already know what he's doing on rates. They gave you their forecast and brief statement. But here's what you want to look for. Let's keep it simple. We're still in that recent range. We're at the bottom of it, and so it's simple. You sell rallies to the top of a trading range, and or short down to the bottom, and you cover that short and or go long, and then you wait for a solid breakout. Today is Fed day. I hate to say it. Any breakouts have a much higher chance, especially early on, of being a whipsaw. But if you want to take it on faith, you could take the breakout in either direction. If you get the whipsaw, then you just realize you were wrong, and if it whipsaws you back, you can always jump back in. So I'm an active trader. I don't mind, going in, out, in, out, in, out. But like I said, that's it. We're at support, and turn back all the lines. That 60-minute divergence is not only still in place when you look at what the PPO is doing. So we made an ever so technically a slightly lower low below that previous low. We overshot it briefly, and in doing so at that time the PPO was higher. So that only extends or increases the divergence right now. Again, there's no divergence. It's not a buy signal, and there's no guarantee that it can't be taken out. But what is not a buy signal, but an objective long entry, is a drop to support. So let's see what happens. If we start to reverse, there's your level right there. The recent high is around 291 and change. Pop that, you're going to run up here to this next resistance level, which is about, I've got two lines in close proximity, 296 to 297. Back test to the uptrend line, probably get your first reaction there once that's taken out, and then you have a downtrend line right there. SPY, S&P 500, same thing. See this? Here's my divergence line. Just make it a little bit longer, and that's it. So all right, I can't add anything else to that. So there are no guarantees, but I like it, and that's what I did. And if that plays out, then Bitcoin's going to rally, and Ethereum. And I already went over that earlier. Their charts are very constructive. So this is a key battleground for the bulls and bears. So whoever wins this one, if the bears can take it out, and I'm speaking metaphorically, just selling pressure, more sellers and buyers. If they can pop, burn out these divergences, take out these supports, especially take out that next support below on SPY at about 373 or so, 372, and the recent lows, and sure that we're probably going to go down, but I'm still banking on a nice rally. And this, I view that drop today, what was it, a better than 1.65% on SPY, and on QQQ. Yeah, I had orders queued up ready to go, and fired them all off there. So 2.21% drop. So, and then I got that post out to you guys right away. So hopefully, well, again, do your own thing. Don't do what I do. I'm an aggressive trader, but I'm just showing you where the shots that I take, and when do I realize I'm wrong? That's what the stops are all about. What else? Well, crypto, I already covered it today. No reason to go over that. It did. It went, Bitcoin, Ethereum, GBTC. They're just, they're mirroring the stock market. This is exact drop, but it's going to drop more. Instead of the 2.2% or so drop in the Qs, you dropped 4.3 in Bitcoin. It's that simple. You have virtually a double beta, at least twice the move. So what does that mean? Beta adjust your position size. If your number is 10,000, whether it's 1,000, 10,000, 100,000, a million, whatever you trade in the QQQs, you're going to trade half of that in crypto at least, because you're going to get double the percentage gains if right, and you're going to have double the percentage losses if wrong. All right, and then my favorites here. One of my favorites. Came into the day with bonds that, the initial knee-jerk reaction was down, but I had a bunch of orders I fired off. I bought a bunch of treasuries. Mainly, I've already owned the ZF, ZN, and Z. I'm covering the yield curve, mostly stacked in ZN and ZB. That's the 10 and the 30-year bond. And you can see here, let me just show you what happened. Let me go to ZB. That's the long bond. You're going to have the most juice on that one. Where's it? Where's my CB chart? Bear with me. Here it is. Okay. Let me just show you this daily chart. Again, I covered that earlier today. I used TYX, the 30-year yield. Here's the, look at this. This is the daily chart, daily candles, a ZB. Rarely do you get such a uniform, controlled walk down a trend line like this. What I mean by that is, look how many candlestick reactions on that trend line. It doesn't get any more well-defined. And there are no guarantees, but to me, the more well-defined a trend line is, the more technically significant it is. So if they pop this, which I suspect they will, and there's some big divergences underneath, you're going to have an explosive rally in treasuries. And, like I said, it's not, treasuries, this would be considered a huge move, 4%. And I think we could do it in just a couple days if Powell gives the catalyst today. He doesn't even have to. Sometimes the technicals will just play out on their own. If they can pop that level, what does that mean? You want to see, obviously, an intraday break should get it going, and that's where you zoom down to the intraday charts. You go down to here, 3 months, hourly chart. You can see my trend lines. I have alternate trend lines, but pretty much right here, there you go. This is the primary downtrend line right there. And then I have a price alert set just in case I want to even stack in more. That should do the trick over 131.070, and boom, rocket this thing up there. If it happens, charts are pretty darn constructive, but we've been diverging. I've been talking about this price channel forever and a day, and we just keep going lower, lower, lower. So that's the trend until it isn't, until we get the buy signal there. So and that's where I plan to add and swing, and then I'll focus on this chart or even the daily chart, depending on what I see if we break out. So I'm going to end it here. Just wanted to get this quick one out to you. The day is still very young. And again, the market from here probably goes in a little bit of a holding pattern to the press conference talks. And then, look, don't get married to any one bias, any one positioning. I'm not. I'll certainly, take, for the first time in a while, I've been on a pretty good streak lately. I'll take some licks, when in a little more aggressive than I usually might before the FOMC meeting, but plenty of room to add. And I'm talking about long the equity markets and long treasury bonds, and then crypto as well. That's it. All right, I'm going to wrap it up here, get the video out to you guys, and I will do an end-of-day wrap regardless of what happens. This has been Randy Finney with Right Side of the Chart. Have a great day.